there's definitely a lot of room for staking to grow on Ethereum. I think right now it's something around 25% of the total ETH supply is staked. Some other networks are like 40, 50, 60% plus. So like just compare, I mean, of course, if Ethereum is different, it has a more distributed holder base, but feels like there's more room to go. And we're soon going to be hearing a lot more about restaking, which is a new primitive that's going to start to become a lot more significant probably over time. And yeah, there's a lot to happen on the staking side. There's obviously the question on whether staking will be allowed on the potential ETH spot ETFs, which I think will probably initially be a no, but who knows? We're about 2 months away from seeing the SEC decision. So yeah, there's definitely no lack of topics to address there.
Hey everybody, thank you very much for joining us for another episode of CFB Talks Digital Assets. We are the home of informed conversation about crypto for institutions building the future of finance. I'm Ken O'Deleger, Head of Content, and I'm joined as usual by my colleague, Gabe Selby, who's Head of Research. Today, we are fortunate enough to be joined by our esteemed guest, Mr. David Lawant, who is Head of Research of FalconX. So, David, we are very, very stoked for you that you've joined us. Welcome aboard.
Thank you, Ken. Thank you, Gabe. It's a pleasure to be here. I'm excited for the conversation. Thanks for having me on.
Perfect. So, David, basically, his background is he currently head of research FalconX. He has prior research experience and prior research posts in Bitwise and Hashdex, and going further back. A research at Itaú BBA, which some of you will realize is a Brazilian firm. So, what I would ask to begin with, David, for people who aren't so familiar with FalconX and maybe with the market as a whole that you serve, what are some of the highlights of the role the group plays?
Yeah, of course. That's a great question. I'm very happy to answer. So FalconX is one of the leading global crypto prime brokers and trading desks. And we do a bunch of things. The concept of a prime broker is obviously not new to crypto. It's something that has been imported from traditional finance over the last few years as the crypto market structure started to become more sophisticated and we started to see more institutional players being active in the market. But one of the things we do is to provide liquidity. So you can think of us as a trade execution provider for a lot of the institutions that are active in the space. There's a broad range of institutions here that we cover. You go all the way from the most crypto native hedge funds and venture capital firms you can think of, all the way to traditional finance companies that are starting to enter the space, Bitcoin miners, ETF issuers, which is a new client persona for us, which is super exciting with the launch of spot Bitcoin ETFs in the US. You can think about retail aggregators, right? So there's a bunch of players that provide crypto access to crypto to retail. And basically a lot of those or some of those will use a liquidity provider underneath their offers. So there's a very broad range of clients here that we cater to. And I always like to start by telling what is the difference, or perhaps what are some of the fundamental differences of how an institutional player accesses the crypto market versus what a retail person, let's say us, would do, right?
Yeah.
So like if we wanted to buy our Bitcoin or our crypto, basically what we would do is we would open an account at an exchange and we would wire money to that exchange. Let's say it's going to take a few hours or maybe a day for that money to kick in. We would put an order at that exchange, buy our fraction of Bitcoin or crypto, and then we would have it, and then perhaps we would do something with it, take it to self-custody, use it for whatever activities that would go after. So that works for a retail person, even like some relatively perhaps large positions. But imagine if you're a large institution in which like you wanna have access to millions or tens of millions, or in some cases hundreds of millions of dollars of crypto at once. So those folks, they don't go through the same rails. Basically, usually what they do is they have a liquidity provider that is connected to the ecosystem, and that includes not only exchanges but also includes OTC desks and market makers and miners or other potential natural players who will be on the opposite side of their flow. So basically, they use a liquidity provider as kind of their front end to the overall crypto liquidity. These are firms like us that provide good execution, that have access to a very large part of the crypto liquidity. We're active on spot, on futures and options, and we can provide our clients with very efficient execution in a very simple way. There are other things that perhaps are even more akin to what we think of a prime broker function in traditional finance, which we also do, which is things like credit provisioning and in all sorts, right? So perhaps an institutional player would not like wire the money, wait for a few hours to trade on an exchange. They can use, for example, our balance sheet to do that. So there are a bunch of services that we provide, and I think we're a key part of the institutional crypto trading infrastructure. A lot of players will choose to interact with a prime broker or a trading desk instead of going directly to exchanges.
I think that was really informative. I know, like me personally, I probably don't know the script well enough on why, prime brokers seem to just dominate the institutional landscape versus, just doing these kind of retail rails that you are talking about. So I think a lot of the listeners are going to find that to be helpful in kind of understanding, okay, why do institutions go to these prime brokers instead of executing on their own behalf, maybe on some of our constituent exchanges that we have, that feed the order books into our Bitcoin reference rate. But that leads me to this next topic that I want to dive into, which is the partnership between FalconX and CF Benchmarks, which I believe the partnership started in 2023, right? And since then, FalconX has been using the reference rates that we provide to help price derivatives like swaps or options or non-deliverable forward contracts that use to settle our BRR or the ETH US dollar reference rate. Would you be able to kindly just jump into how we came to this partnership? Why did FalconX select CFB to price their derivatives?
Yeah, so I mean, derivatives is a massive business for us, especially options. As you guys mentioned in the beginning, FalconX is the first, and I think so far the only crypto company that has a swap dealer license with the CFTC. And what that means is that we can do certain instruments, and we can allow highly regulated access to institutions who prefer to do it this way. So these are things like swaps, NDFs, OTC options. So this is a market that we are very active in. It's actually one of our key markets right now, one of our key priorities. And of course, having a good reference rate is something important for you to price these instruments. You guys are obviously the instrument used by the CME, which goes a long way in saying how ubiquitous your reference rate is. I don't know what percentage of the 11 spot ETF issuers are using CF benchmarks, but I think it's 8 out of 11.
It's high. It is the majority. Yes, it is.
And so there's that. The other thing that I know is interesting for our clients is that you guys also provide indices at different closes. So like there's the London close and the New York close, which for some clients is also more helpful and more convenient instead of using like Asia market closing hours. So that's basically you guys are obviously a very important player in the market, and super excited to be working together.
Brilliant, brilliant. And one piece of color that we heard that really sort of places FalconX really, really clearly, its place in the sort of broader, if you like, digital asset markets really clearly was some data that you guys published following the first day of trading of the spot Bitcoin ETFs. It emerged that FalconX became, let's see now, let me get this right, executed over 30% of all Bitcoin creation transactions for ETF issuers on the first day of trading for the spot Bitcoin ETFs, which is something that we were obviously really excited about because we've got, you are our client, using our regulated Bitcoin reference rate for settlement. That was great. But this leads me to a question which I think, again, people would be really interested to hear. That's anonymized, totally in general terms. Is it possible that you can outline an example of a fairly typical transaction? I mean, it could be totally, modeled by an ETF participant, if one exists, that you maybe have witnessed in recent months related to these spot Bitcoin ETFs.
Yeah, 100%. As you said, the ETF market is super exciting for us. I'm happy to go through how a trade works. It's actually relatively simple. The devil's in the details and how well you execute. But the transaction is the typical transaction flow is not complicated. So I think you can think of the ETF ecosystem as having four main players, which for simplicity I will collapse into three. So first, you have the ETF issuer, right? So this is going to be the BlackRocks or Fidelities or Bitwise, ARC21 shares. Those are the ETF issuers, and they basically manage the ETF on behalf of their clients. The second kind of component, which I'm collapsing here, are the market makers and the APs, or the authorized participants. Very commonly, they are the same entity. So basically, market makers are those folks who are buying and selling and profiting from relatively small but very frequent deviations from the ETF price to its NAV. And the authorized participant is the player who can request creation and redemption transactions with the ETF issuer, right? So basically, this is the mechanism that makes the ETF trade very close to the underlying asset price, in this case, the BTC. So whenever the price kind of starts to detach too much from its NAV, there is a flow that is initiated by the market maker / AP, very commonly the same entity here, that aims to profit from these small deviations. And then there is the third player here, which is where FalconX fits, which is what we call the liquidity provider. So we are basically one of the firms that will actually source the Bitcoin. And the way it works is, it's actually very simple. Whenever there is a detachment from or sufficient detachment from the NAV to the secondary price, these market makers will execute a trade. The AP will request either a creation or a redemption transaction with the ETF issuer, depending on which side, depending if we're above or below the NAV. The ETF issuer will basically collect all this flow throughout the trading day, and then at some point, usually closer to the end of the market close, they will come to a number of liquidity providers and request quotes. These quotes are referenced in the price, the reference price that the ETF uses, right? So in this case, that's where you guys, for us, like play out. They're going to request, hey, I need this amount of Bitcoin. What is the best price you can give? So here there is a competition between a number of liquidity providers. So let's say that we get the trade. So then basically what we have to do is we have to actually buy the Bitcoin. And we follow the reference price is obviously super important here, and we basically deliver the Bitcoin to the ETF issuer on a T+1 basis. So that's kind of the workflow. It's not super complicated. The devil's obviously on the detail. It's a highly competitive market, and execution, I think, is the name of the game here.
I think like what you just described in summary is the importance of why having this create redemption process with these new spot Bitcoin ETFs is so important in delivering a better outcome for investors. Where, as we had, pre-spot Bitcoin ETF, we had closed-end fund trust structures, which would deviate significantly from their NAVs because there wasn't that create redeem process that you just described. And so a lot of investors, depending on the type of market environment, could have either seen, potential excess gains with premiums in their funds or excess discounts, depending on if we're in like a bull or bear market. So I think it's just kind of important to see the nuts and bolts and kind of go into the weeds with you here.
But one other thing, Gabe, I think just a sort of addendum to what you were saying, literally, is it's also what David has also, given us a layup to, is it emphasizes the importance of the Bitcoin, the CME/CF Bitcoin reference rate liquidity complex that we're always going on about, is always in the back of our minds. Clearly, we have the liquidity provider, FalconX, using the BRR. We have the ETF issuers, your BlackRocks, your Bitwises, your Franklins using the BRR. And you have, if they, which I know that they do have a lot of common sense, a lot of, they're smart, the MMs and APs clearly looking at the BRR, right? So this also emphasizes the importance of having a common, regulated, accurate and reliable price that enables the whole system to work most efficiently to the benefit of all, I think. So that's another point of there. But I think, Gabe, you had the next point to take the conversation of.
Yeah. David, it would be really awesome to kind of just get your perspective on how you see now that we've gotten into this next milestone, how do you see the institutional crypto market evolving next? What are the next steps that we're going to be seeing come around the corner? You're on that side of the market maker side. You're on the institutional side. Give us some details on what you're seeing over there.
Yeah, for sure. While there's a lot to talk about here, I think we're at very exciting times. I guess first of all there is still a lot to go on the ETF side. There are a few things that I've been paying attention. I do think that there are some key market structure trends that we are starting to see changing after the spot ETF launch. These are all good news. I mean, it's basically a reflection of a maturing asset class around Bitcoin. I think there's still a lot to go on this side. I think we're still in the early innings of the typical sales process of a typical ETF. The inflows have been extremely impressive so far, but I think that there's still a lot to go. A lot of the larger wirehouses and platforms are not totally plugged into yet and cannot offer these products. There's also the potential development of an options market on the spot ETFs. I think this is a somewhat underrated, but potentially very important development that could happen between now and September. And the reason this is interesting is because it will create a new options market. Today, the options market is basically either based on, let's say, spot BTC, which happens on exchanges like Deribit, and these are offshore exchanges, mostly not accessible to US persons, or you have the institutional options market, which are CME options. These are options based on CME futures. And then OTC options, which is the type of things we do, which are only allowed for relatively large institutions. So or accessible to large institutions. So by developing an options market on top of spot Bitcoin ETFs, I think that this could be a pretty interesting development for the options market as a whole. The options market is obviously very relevant in traditional finance. And I think this is a relatively new development in crypto. I think just a few months ago, the options open interest surpassed the futures open interest, which is normal for traditional finance. But in crypto, this wasn't the case until very recently. So I think we could see some things going on there. There's obviously expectations around a potential ETH spot ETF approval, which I would call 50% odds. And I perhaps even a little bit more positive than the market. I'm at kind of 50-ish. I think some folks are moving towards or gravitating towards expecting that approval not to happen. But let's see what's going to come in a couple of months.
Sure.
There's also some very interesting macroeconomic trends that I think have been highlighting the use case of Bitcoin more specifically as this kind of non-sovereign store of value, and we can talk a little bit more about that. And just to end, I don't want to speak too much.
No,
but
please.
there's also a lot of very exciting developments happening on the non-Bitcoin kind of crypto side of the market. Of course, some very interesting use cases around Ethereum. Restaking is a thing that is probably going to be growing from here. There's going to be interesting developments on interoperability. There are some interesting use cases, I believe, even for like crypto consumer, things like decentralized social media. So it's a super interesting time to be involved in crypto. I think it's not a coincidence that we are seeing some of the quote unquote more institutional venues seeing record activity. Like if you look at the open interest of the CME, I don't think it's ever been this high. This is strictly an institutional venue. And I think a lot of these developments underpin this trend.
That's brilliant. You've actually dealt with most of the question that I had in mind to ask you at this point, David. You talked about the market structural, a little bit of the market participant-driven aspects of the potential evolution of these markets. What I want to ask you, if you care to partake, is in terms of the economic macroeconomic sort of currents that may have an impact on price, on sentiment in the medium term, maybe even the near term. Is there anything? Because I tend to think of you guys who are your liquidity providers, and maybe anyone who's at the cutting edge of how markets work, as having a bit of a bird's eye view and having maybe an advanced view as well, just by virtue of the nature of what you guys do. Are there any of these trends, or is there anything that you've spotted? It could be positive, it could be negative, but I sort of doubt that potentially can give us a bit of a steer on where the market might go in the medium term. I think we've just had a bit of a correction by price, and it looks like in the last few days, maybe the last week, we may have sort of like rounded off that correction. So I guess the next logical sort of projection is that we continue higher. But what is your view about that?
Yeah, that's a super interesting question. And one of the advantages of my seat is that I get to talk to a bunch of smart investors on almost daily basis. So it's a pleasure to discuss markets. I think yes. So I want to cover perhaps three main points here. First of all is right now, I think ETF flows are driving most of the price action. So whenever we see strong inflows, not necessarily in a single day, but perhaps on a short streak of days, this has been having a positive impact on the market. Whenever we had, which we just had recently last week, big net outflows, mostly coming from one of the issuers, we see some corrections. These numbers are large. We're talking about $400-500 million of sometimes inflows, sometimes outflows. I think there's been a day in which the net inflow was over $1 billion in one single day. So these are large flows, and they have been dictating the market a little bit. There is also what I call a reflexivity aspect to it. In the set, what I've been saying is that probably until 2 weeks ago or so, flows were driving prices. I think now prices are also driving flows to some extent.
Amazing.
Bitcoin is this kind of very reflexive asset. I'm a huge fan of that concept. So yeah, definitely flows is something that everybody has been tracking. there's a few interesting indicators there. So like the Coinbase premium, or just looking at the market share of volume happening around the ETF fixed time. So there's a bunch of wonky indicators that people were following to have a better view of how those flows are looking like. So that's one thing. And so far, I think they're looking positive. Of course, every once in a while, we're going to have outflows, as we had last week, I think mostly related to bankruptcy proceedings. But overall, the trend looks very positive here. I think the ETF sales process is actually kicking in. So I think we're going to see a fair amount of good news over the next weeks or months. The second point I want to highlight is liquidity trends. This is something we pay a lot of attention to, especially in crypto. People pay a lot of attention to the price, but the liquidity underlying that price, I would say, is almost as important. For me, very strong indicator of a crypto bull market is when prices are going up, but volumes are also going up.
Yeah.
On the reverse, we have seen a bunch of fake bull markets in crypto characterized by higher prices and lower volume. When you see that, that's usually a sign that the bull market might not be as strong. And so far, these liquidity trends have been exceptionally strong. So like whether you look at volumes, and I think half of the top 20 daily volume prints for Bitcoin happen in March 2024, like ever. We're seeing Bitcoin trade on the spot market commonly something around $30 billion or so. And at the same time, the order books are very thin and they're relatively narrow, meaning that there aren't very many sellers in the market. So that's why we are seeing this kind of elasticity impact on the price. This is something we monitor very closely. Of course, it can change at any time, but so far they look extremely healthy. So, so that's one of the things that give me confidence of the continuity of this rally. And the last thing I want to say, and I want to touch on the macro point, because I think this is an important one. When you're kind of sailing and then you get this tailwind, you usually think it's you that is doing all the work, but there's actually some wind helping propel you. I think the equivalent in the current market is macro. I don't think macro has been the primary driver of prices. That's mostly ETF flows, but macro has been helping to some extent, or at least it hasn't been an obstacle. And we are going through a little bit of a shift in the macroeconomic cycle. I think we are going through a transition period. You can see and you can see that this already happened like 4 or 5 times this year when you have like a big macro announcement, whether that's an inflation print that is out of expectations or something that comes out of the Federal Reserve press conference that folks were not expecting. You can see markets shift and you can see Bitcoin and crypto move together. These movements don't last very long because the inflows are the primary driver. The ETF inflows are the primary driver, but it's important to keep in mind that we're going through a shift in the macroeconomic cycle. I'm not a macroeconomic specialist, but I think if you look into correlations between like risk assets and crypto, they're low and they kind of underpin Bitcoin or crypto's role as a portfolio diversifier. They're slightly higher than they were before. So macro is the thing that I believe is important to keep in mind and pay attention to.
I won't ask you how many rate cuts you're predicting then for this year or next year, but certainly I agree with a lot of your takes here. And yeah, what you were saying about the ETFs just getting started is something that I think not too many people kind of fully appreciate. A lot of these wirehouses, a lot of these big banks haven't really gone through the due diligence process to onboard these products. And the ones that have, it really kind of depends. Not all onboardings are equal. Maybe they've only onboarded it for maybe high net worth or private clients, or maybe they've only approved it for, client directed type allocations. But certainly if we were to envision a world where, there's actual model portfolios being created by, independent advisors or these banks, these wealth management units at these wirehouses or banks, you could see how we're just kind of at the tip of the iceberg, right? In this journey. So, no, a lot of good stuff to unpack there. What you were just saying, but what would be what's next for FalconX? Are there any high level plans that you're able to share for the medium term that we can discuss here?
Yeah, for sure. I mean, we are very focused, of course, on the institutional market. We're very excited about the developments that we have been seeing. So far, right now, there's probably two main avenues that we're very excited about and that we've been spending time and resources on. One is the spot Bitcoin ETF and being a liquidity provider to as many of these issuers as we can. This is a very interesting part of the market for us. And the other is derivatives, perhaps more specifically options. As I mentioned, options are a super interesting instrument for expressing market views that many times you cannot do otherwise. And I think it is a sign of the maturing of the market structure in crypto to see how options are becoming such an important instrument for markets, especially for institutional investors. So these are probably the two things that we're more focused on right now. In terms of geographical focus, I mean, we've been developing a presence in Asia for many years. Over the last year or so, we did some key hires in Europe. So we're also very excited to see what's happening in these regions of the world as it pertains to crypto. And finally, our goal is to be a one-stop shop for crypto institutions who want to have secure, regulated, and efficient access to the crypto space. So we hope to continue to make progress in that direction.
Absolutely brilliant. And that kind of brings us to the end, David. I can't tell you. I mean, I know you probably get a lot of people blowing smoke after you've given them these kind of like interviews. But you know, take it from me. In all honesty, that was so insightful. I don't think that kind of level of detail or that sort of like the minutiae, the contours of how how you operate in the market is generally aired. You've actually done that today in a way that I think is highly informative and educational. So we really, really appreciate it. And I'm not joking. We do need to get you back on in about 6 months to tell us about how the Ethereum market is evolving, among other things. So thank you very much.
That's very kind, Ken. Ken and Gabe, always a pleasure talking to you. I'm more than happy to be back. Always conversations. I also learn a lot from you, so they're always insightful. Just call me and I'll be back.
You're brilliant, man. Thank you. Thank you.
Thanks, David.
Thank you, folks.
So guys, was that insightful or was that insightful? We got a bird's eye view of the crypto market from the point of view of a liquidity provider in the institutional space. And we got down into the weeds, the minutiae. We got access to rooms and portals that we don't normally see. And I think they were highly instructive. So we really appreciate David coming aboard to actually give us that. And if you do like that kind of insight, we do have several episodes of CFB Talks Digital Assets now available for viewing and listening pleasure on all major platforms. Again, if you do like what you've just listened to or heard, why don't you go ahead and share it with someone? I'm sure you know someone who would actually get as much interest or pleasure out of it as you have. Beyond that, go to cfbenchmarks.com for all of our content. Gabe's quarterly attribution reports, monthly market reports by Gabe as well, the newsletter, and a whole host of other content is available on cfbenchmarks.com. Apart from that, we are really appreciative of you joining us to listen to this episode, and we'll see you for another episode of CFB Talks Digital Assets. Thank you for joining us.